Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CITIC Bank interim report. China CITIC Bank Corporation Limited offers a wide range of banking services to its customers. These include corporate banking, corporate loans, deposit services, agency services, remittance and settlement services, and guarantee services retail banking. Personal loans, deposit services, agency services, remittance and settlement services, and guarantee services financial markets business, plus interbank lending transactions, plus repurchase transactions, plus debt instrument investments in the interbank market, plus trading in debt instruments, plus derivatives trading, plus forex trading additional services. Wealth management, treasury business, asset management, financial leasing, private banking, and other non-bank financial services. The significant increase in China CITIC Bank's stock price over the past year can be attributed to several key factors. The bank's improving asset quality, with declining non-performing loan (NPL) ratios and increasing NPL coverage ratios, has been a major catalyst for its growth. Additionally, resilient profit growth of 2.8% year-on-year in the first half of 2025, strong corporate loan growth of 10.9%, and increased fee income have all contributed to the bank's success. The bank's ability to optimize its financial structures has also helped stabilize its net interest margin (NIM) trend, while positive future earnings forecasts anticipate a compound annual growth rate (CAGR) of approximately 4.8% for earnings in fiscal years 2024-2027. Furthermore, the proposed interim profit distribution plan, with cash dividends of RMB 1.88 per 10 shares, has provided an additional boost to investor confidence. Overall, CITIC Bank's commitment to quality lending and its focus on financial stability have led to positive growth in revenue, profit, and provision coverage ratio, outperforming the market despite a narrowing net interest margin. These factors have all contributed to the bank's stock price increase of over 53.66% in the past year. The primary drivers of revenue growth for a financial institution are multifaceted and varied. Key contributors to revenue growth include general corporate loans, personal mortgage loans, corporate deposits, and personal deposits, which have seen significant year-on-year increases. Additionally, the net interest margin has improved due to declining asset yields and increasing liability costs. Non-interest income has also grown in areas such as fee-based services, agency fees, and commission income. The institution's digitalization efforts, including AI-powered marketing, conversational AI platforms, and digitalization projects for pricing management, have contributed to revenue growth by improving operational efficiency and customer engagement. Wealth management revenue has increased due to enhanced asset allocation capabilities and personal deposits growth. Fee-based income has also grown rapidly due to scale increases in personal wealth management and agency fund distribution. The institution's efforts to build a leading trading settlement bank, establish a coordinated management system, and improve platform trade settlement capability have also contributed to revenue growth. On the other hand, the primary drivers of revenue decline are limited to two areas: net non-interest income from financial markets business and net operating income from financial markets business. These declined by 8.25% and 10.16%, respectively, year-on-year. The company is indeed generating positive operating cash flow, as evident from the multiple instances of net cash inflows from operating activities. The figures consistently show a positive amount, with the highest being RMB 28.651 billion and RMB 307.399 billion, indicating a strong financial performance in terms of cash generation from operations. The company's debt level and interest expenses have shown mixed trends over the past few years. Total debt has increased by 3.4% to 14.2% in different periods, indicating a growing financial burden on the company. However, interest expenses have decreased or remained stable in some periods, suggesting that the company may be managing its debt effectively. Notably, while total liabilities increased from RMB 8,232,584 in 2024 to RMB 8,479,953 in 2025, interest expenses actually decreased by RMB 435 million and RMB 297 million in different periods. This mixed trend suggests that the company's financial situation is complex and requires careful analysis. Overall, while there are signs of increasing debt levels, the impact on interest expenses has been relatively stable or even decreasing in some cases. The financial performance of various segments and regions within the company has shown mixed results in 2025 compared to 2024. On a positive note, manufacturing, leasing and business services, Yangtze River Delta region, corporate banking, head office, overseas and personal banking have all performed well, with some even experiencing significant increases in operating income and profit before tax. In contrast, wholesale and retail, transportation, storage and postal services, construction, Bohai Rim region, Western China region, Central China and Northeastern China have struggled, with decreases in their respective percentages or increases in non-performing loan (NPL) ratios. Treasury business also reported a significant increase in operating expenses. Overall, the company's performance is divided between strong growth in certain segments and regions and weaker performance in others. Management's outlook and strategy. The bank's management is emphasizing a multifaceted approach to drive growth and expansion. Key areas of focus include strengthening credit support for the real economy, implementing national industrial policies, and deepening foreign exchange business expansion reform. The bank aims to shift risk control nodes forward and accelerate the development of in-house collection teams for its credit card business. Management is also prioritizing technology-driven expansion, cross-border financial services, and international development through innovation-driven development. Additionally, the bank is emphasizing inclusive finance, investing in early-stage enterprises with core technology, and building a private equity ecosystem for technology finance. The company's 5 leading strategy for high-quality development will be advanced, focusing on national strategies such as technology finance, green finance, inclusive finance, pension finance, and digital finance. Overall, the bank's management is committed to driving growth through strategic investments, technological innovation, and a focus on key industries and regions. Acquisitions and divestitures overview. The company has made a few notable transactions in recent years. In terms of acquisitions, the most significant one was acquiring technology enterprise customers through a private equity fund custody arrangement. However, it's worth noting that there were no other major acquisitions mentioned in the provided summaries. On the divestiture side, the company disposed of its existing portfolios of wealth management products. This move suggests a strategic shift towards focusing on core business areas and reducing non-core assets. The company has a history of distributing wealth to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out a significant cash dividend of RMB 19.455 billion in 2024, with further distributions made in subsequent years. Additionally, the company has also engaged in share buyback activities, utilizing loans for this purpose totaling RMB 12.135 billion across multiple transactions. That concludes the financial summary for CITIC Bank. Feel free to comment below, and I will be happy to answer them when possible.